Hi, this is Jean Joe, broker and owner of Perisson Real Estate. Thank you for joining us for this week's edition of Perisson Pulse. Today is March 15th, 2024, and it's hard to believe that we're already halfway through the month of March, and literally almost at the end of the first quarter of 2024. So much has happened, and yet it feels like the time is just flying by. Today, I'll be doing a market update on our numbers for February here in San Mateo County. But on top of that, what I'm planning to do is actually go into a little bit about a big announcement that was made by NAR, the National Association of Realtors, this morning regarding litigation that you may or may not have been hearing about in the news. I actually recorded a video on this a couple months back, so in an earlier edition of Perisson Pulse. So if you'd like to check that out, it goes into a little bit of an overview of what that litigation is about. Before I go into that, though, I did want to do a few announcements. First of all, we had our retirement and relocation strategy seminar this past Wednesday, and it was a really great event. Special thanks to Joe Daly and Ron McCard for speaking on the different topics like Prop 19, 121 exclusion with combined with 1031, and really being able to strategize different ways that people might be able to plan for getting to your retirement home in the future. There were almost 40 people that joined us, or a little over 40 people, sorry, that joined us for the in-person event in Millbrae. And the video is coming soon. So as soon as that goes out, it will be on our YouTube channel here. And those of you who did attend or signed up will be pinged by that. If you weren't able to attend, I hope that you'll be able to just take a listen to that video, because it'll be very interesting for you. In addition, we have on April 17th, the Mastering Financial Essentials in Retirement seminar that will also be in person at 7 p.m. and at the Millbrae Recreation Center. Our speaker, Dan Young, I was talking to him this week, and I'm really excited to hear what he has to say, because he was sharing with me that a lot of this stems from his own personal journey, and how when he turned 65, he had his retirement account and things like that, but there were so many things that he had not been really ready for financially. So this will cover a variety of topics: Social Security, Medicare, Medi-Cal, 401k, IRAs, the whole gamut, long-term care insurance, just the things to think about as we get into our more mature, more experienced years. So that'll be on April 17th. And then on May 15th, we have a seminar called Investing Wisely in the Golden Years. That will be also on Wednesday at 7 p.m., but it's going to be via Zoom. And this one, we have our speaker, Duncan Eng, will be discussing different other options that there may be in case, as we grow older, maybe our needs may change, and we may want to have other alternative investments and really be able to think through those carefully. Also, I know that a lot of people, as we grow older, don't want to be landlords anymore, don't want to be the housing providers anymore. And so what are some other options? So we'll be talking about a variety of different things, which will include things like DSTs, long-term care insurance, annuities, and the like. So I hope that you'll be able to tune in for that as well. And then on May 11th, we have a shredding party. My ever popular shredding party will be held in Millbrae at Mills High School. And that will be on a Saturday, May 11th, from 10 a.m. to 1 p.m. This is on-site document shredding, as well as e-waste recycling. And there is a QR code on the slide here. So if you are planning to come, we do ask that you make sure to sign up and let us know that you're coming. I have so far never turned people away who haven't registered, but I may do so if we start finding that we don't have enough space for the people who did register. It is free of charge, but we do ask that we do collect donations for Mills High School. So with that, I'm going to go into a update on our February numbers for real estate, and this will focus on single family homes in San Mateo County. The first slide that I have here is on median sale price, and again, this is for single family homes in San Mateo County. This chart takes us back to January of 2010. And if you're aware, and I've talked about this before, 2008, 2009, our prices were right around that lower level at the 500,000 mark. And since then, and especially since 2012, we've seen that gradual increase. Of course, ups and downs through the course of a year and seasonalities and whatnot. But we have seen that trend going upward. The red vertical line here is COVID. The lockdown happened in March of 2020. And at that time, we weren't sure what was going to happen. Things stayed fairly steady. And then when we got to January 2021, the prices just took off. So through January 2021 and the first half of January of 2022, we were able to see a huge spike in terms of the median sell prices. And so for that peak that we see right here, that represents April of 2022, and that was the all-time high at 2.25. Through the middle of 2022, we started to see median sale prices come down, dip down a bit. Part of it was that this kind of excitement, or I don't want to call it hysteria, but the excitement of post-pandemic times were over. And on top of that, the interest rates started to increase quite a bit. So they almost doubled over the course of 2 or 3 months. And that really brought the demand down. So that combined with already high prices brought the demand down somewhat, so that we're seeing that going all the way through the end of 2022, things started to slow down a little bit. And we got to the point where that dip here was in January of 2023, and that was a little under 1.5 million at 1.485 million. And since then, the prices also started coming back up. So the interest rates have stabilized somewhat toward the latter part of last year. By October, and I'll go into the interest rates a little bit, but by October, we had seen more of the peak of it, and then more of the buyers started getting accustomed to the interest rates. And so we saw that the prices did come up and down and up and down over the course of last year. As of January, we had the median sale price was at 1.842 million 500,000. And then the median sale price for February was actually a little bit higher. So it was at 1.884 million. We just comparing with last year, last year, the median sale price in February was actually 1.95. So we do have a dip somewhat, but month over month, we do see it going positive. So that's a good thing. And it's almost as if you were to discount the years of 2021 and early 2022, you still have a pretty steady increase going upward. And so we're still holding strong here, especially in the Bay Area. In terms of months of inventory, this has to do with how much inventory we have, and the line up here, the higher horizontal line at 6 months, that's what's traditionally called a balanced market. Anything below that is traditionally considered a seller's market. And as you can see, again, since 2012, we've seen that it's been pretty much in a seller's market and hovering around the 2-month mark. That time period where we had that big peak post-pandemic in 2021 and first half of 2022 also correlates with what we see for inventory levels, where they were hovering right around the 1-month mark during most of that time, and even got down to 0.7 at one point. So very low inventory. That makes sense that you have low inventory, you have a lot of buyer demand. That means the prices are going to be higher. As the prices start going down, that's representing that maybe the buyers aren't as motivated and out there. And so we have more inventory that stays on a little longer. And so that's why we got up to the 2 months, but that's still very low. For January, the months of the inventory levels were at 2.2. And then for February, they went down to 1.7 months of inventory. So if you think about that, inventory levels have to do with, if we were to take all the inventory we have right now and don't add on any more, how long would it take before we ran out? And right now, that's as of February, that was at 1.7 months. Usually in March, April, May, that's our prime selling season. We start to see more inventory come on tap. But in general, even in those times, we get more inventory, but we also get more buyers. And so they will sell fairly quickly, which I'll show on the next slide. So our inventory levels, again, just have remained in that 2-month level. Even when we have what feels like more inventory, it's still staying around 2 months. The next slide that I have here is on days to sell. And this has to do with if you put a house on the market, how long does it take before you get an offer that you would accept? In this case, You can see that COVID lockdown here. That's zero because the MLS at that point decided to pause for a little bit in terms of counting days on market. Since 2012, it's basically been hovering between 10 to 20 days. So that's very short. You put it on the market, maybe have one or two open houses, and then get a contract, and in many cases, multiple offers, so that you can get into contract very quickly. There are some points at which you do see it going up to, close to 30 days, and those tend to be, they're always in either December or January. For January of this year, our days on market was 18, and for February, days on market, days to sell, it was 10. So again, went down by quite a bit, and we're expecting that to probably continue. Hopefully, as we get into March, as we've gotten into March, usually we see more inventory coming in. So far, I've seen more inventory coming in, but not at a huge rate that kind of absorbs all of the buyers. And so it looks like we're going to probably seeing more of the low inventory issues to come. And with the interest rates, which I'll talk about next, the interest rates coming down a little bit, or people getting used to that mid to high 6% range, the buyers are not so much afraid of that anymore and are willing to go out and buy and then maybe look to refinancing in the future. So here we have from Freddie Mac. This is as of March 6th. The 30-year fixed rate mortgage was at 6.88%. That still doesn't seem very low. And I know since then, in the last week or so, we've actually had it fluctuating, continue to fluctuate. So sometimes it'll get closer to 6.5, sometimes back up to the 6.8. So we're in the mid to high sixes. That is still a great improvement from October of last year, where we're looking in more of the high sevens, so mid to high sevens. In the course of about 3 to 4 months, we've experienced almost a 1% drop overall. Again, it fluctuates, but about that much. And I think that's really helping in terms of the buyers. And the loan agents that I'm speaking with are all saying that their applications are full, they're getting busy. Now it's just a matter of the inventory coming in and people being able to buy. So that's mainly it in terms of what we're seeing in the market. Again, low inventory. I have a bunch of I words: low inventory. The interest rates are, fluctuating, but they're getting lower. We're expecting the Fed to probably reduce their funds rate in June, at their meeting in June, and then possibly one or two more times after that. So some of the estimates that I'm hearing is maybe we'll be in the mid to high fives by the time we get to the end of the year. Interest rates, the inventory, and of course, inflation is what's impacting that as well. So there's a lot going on. We'll continue to monitor that as the spring market continues. So with that, I'd like to go into the announcement that was made this morning by NAR, National Association of Realtors. President Kevin Sears sent an email to all of the members noting that NAR had reached an agreement to resolve the home seller class action lawsuits that have been going on out there for a while. And so before I go into the terms of that, one thing, I am not an attorney, so I cannot read into all of the legal documentation, and that's not what I'm trying to do. I'm just trying to provide information that's already publicly out there now. Second, there is a lot of documentation out there, and I think some of the details have not been completely hammered out yet. So that remains to be seen. And finally, this does need to be court approved, and that has not happened yet. The fact that they are sending out this email and making this announcement, gut-wise tells me that it's probable that they do have a pretty good confidence that this will go through. So in any case, so with all of that, I'll go ahead and go into the terms of what is already known. The first thing is a release of liability. So this agreement would release NAR, over 1 million NAR members, and then all state, territorial, and local real estate associations, as well as all association-owned MLSs, and all brokerages with an NAR member as principal that had a real estate transaction volume in 2022 of $2 billion or below. So that would release them from any liability for the types of claims brought in these cases on behalf of home sellers related to broker commissions. There are some exceptions to this, which I won't go into, but the gist of it is we're trying to get release of liability for all of the members that I just mentioned. Second, compensation offers to be moved off of the MLS. So currently in the multiple listing service, what we have is where the listing agent, when they're entering in the listing, would actually enter in what is the compensation being offered to the buyer's broker. In this case, NAR has agreed to place a newel prohibiting offers of compensation on the MLS. So that field would be removed from there. And so buyers, brokers would not know, and buyers would not know as well what compensation would be offered to a buyer's broker, if any. Offers of compensation could continue to be an option through not through the MLS, but just through negotiation and consultation with real estate professionals. Also, there is some verbiage about sellers being able to offer buyer concessions on an MLS, like for closing costs, but that wouldn't go directly to necessarily be worded to go to the buyer's broker. This change will go into effect in mid-July of this year. The next is written agreements for MLS participants acting for buyers to be required. So most of us are, not everyone, but most of us are actually participants in the multiple listing service. And if so, and representing a buyer, then we would need to it would be now required to enter into a separate buyer broker agreement before working together. So this is something that there always has been a buyer broker form, just to shortcut the name. It's called Buyer Representation and Broker Compensation Form. This has been in existence for many years, but and NAR has been advocating for the use of them. We've been talking about it a lot more since the litigation happened last year. But they have not been required up till now. So in this case, it would actually require that, and that buyer broker form would specify in that case what is the compensation that the buyer's agent is going to be receiving from the buyer. And again, it seems like it's okay to negotiate that out in the contract with the seller, how much the seller, might be able to cover some of that in cost, but that would have to be something that's strictly taken off of the MLS. And so that would avoid any semblance of a buyer's broker screening or, screening out listings and not wanting to show stuff if they're not going to get paid by the seller. So that's the whole idea behind that. And again, that will be going into effect as of mid-July if it does get approved, if the settlement does get approved. There is a settlement payment of $418 million to be paid out over approximately 4 years. So this is a substantial sum, but it is definitely better than I think it was about 5.1 billion was the original judgment in the Sitzer Burnett case. So it is definitely not as bad as that. And the fact that there's a settlement will hopefully mean that there will be less in terms of potential continuing litigation or continuing appeals and money that's going out for that. And so hopefully that settlement, it sounds like people are thinking that as a good thing, and definitely compared to 5 billion, I would say that's pretty good. So, and that is spread out over 4 years. So looking ahead, what does this mean? Well, first of all, as I've mentioned already, this does require court approval of the proposed settlement. So we'll see if there are any changes that are made, if it's approved as it is, but it definitely needs to go through court approval. That's the first thing. Second, assuming that it does go through, then I definitely am anticipating that we're going to have some changes to the listing agreement as well as the buyer representation agreement. The listing agreement currently has it where it would specify, okay, seller is going to pay their broker a certain amount, and then the broker out of that pot will then offer a certain amount, and often half, to the buyer's broker, and that will be published in the MLS, and that's kind of the agreement. Now that will obviously have to change. In addition, the buyer representation agreement may need to change as well, because that does have where the buyer is now agreeing to pay a certain amount to their agent. And then from there, there's a possibility that they can authorize their agent to include in the offer, hey, Mr. Seller, I'm offering this, or Mrs. Seller, Ms. Seller, I'm offering this price to you, but I would like you to pay for my agent fees that I'm responsible for. And you could do that. And there's another provision in that buyer representation agreement currently that states that the buyer can find out that the agent will let them know before either showing a house or before they write an offer, how much the seller is willing to pay for the buyer's agent. So all of that will need to be, I'm assuming that that will need to be revised and kind of, because now what the seller is willing to offer cannot be listed in MLS. And so, how is that all going to work out? I think that's something that we're going to have to see. Changes to the MLS is another thing, which, obviously if the buyer's broker compensation cannot be included in the MLS, then that field will need to be taken out. Also, that there may be concessions, on the other hand, from sellers, that they can offer concessions to help offset some of the buyer costs. Maybe there will need to be a field there. So there are some things that may need to change in the MLS. I think maybe not as much so as we think as to the other forms that we use, but definitely there are going to be some changes there. And then finally on here, changes to how compensation is negotiated in offers. And so now that previously you would see that MLS has a published offer of compensation. And if that's there, then the buyer's agent can go in knowing that that's pretty much what they're going to be receiving. Now that's not there. And so when a buyer is coming in to write an offer, they're going to have to take that into their consideration in terms of how much can they offer while knowing that that they are responsible for paying their own agent, or can they negotiate that with the seller? And so with multiple offers coming in, which are very common in our area, then that's going to be something to have to consider with the offers, is to really net out, what are the differences between the offers, because not all of them may be the same in terms of how much compensation or concessions or whatnot that they're requesting. So it's going to be a little bit trickier, but we'll handle it. We'll work through it. But for now, there will be some changes in there for sure. In addition, looking ahead, some other things that could come up, financing issues. So in a case where a buyer is set to pay their agent, they have a large down payment, they have plenty of reserves, they're in a good negotiating place. This may not be so much of an issue, but if you have a case where it's a low down payment, maybe a first-time buyer whose qualifying ratios are a little bit tight, an FHA or VA loan buyer, and the buyer is going to now need to come up with additional funds to take care of their buyer's agent, that could be a little bit more tricky. And lenders don't have a carve out in terms of how much, are they okay with seller credit and then buyer closing costs, and this whole thing about adding buyer compensation, buyer's agent compensation, that could throw off a buyer if they're very tight in terms of their reserves to begin with. So that's going to become an issue, and we'll see what happens with the banks. Connected to that is, now if you have a buyer who says, well, I just can't afford it. The prices are high enough as it is. Interest rates are high. I'm kind of barely comfortable with the payments. And now on top of that, and the closing costs, other closing costs, I need to pay my agent. And we may see more and more cases where buyers choose to not get their own representation. And I think this is a very, something to really consider seriously for sellers, because if you have a buyer who is not being represented, who does not have somebody who is guiding them through the process, then that could open up a lot more liabilities for a seller, and it could open up cases where the buyer is not really being adequately represented and doesn't really know what they're doing, and it could make things a little more complicated. So that's something to also consider. And this is one of the reasons why, I think a lot of clients that I talk to, they're like, yeah, it's well worth it to offer, as a seller, it's well worth it to offer a fair compensation to the buyer's agent, because we want the buyer represented by a competent agent. So that's just something to think about. And then a few other things, just note that this does not necessarily impact all of the copycat lawsuits. I think it mentions, so I'm not quite clear in terms of what it covers and what it doesn't. It does say in the announcement that it releases liability for sellers selling, but it doesn't say anything about buyers who have sued. And I do know at least of one case, I think there are a couple where now the buyers are actually turning around and suing their brokers. So I'm not sure what impact that will have on either any further outside lawsuits or those representing buyers. And then really the final thing is just to kind of look at how will this impact the real estate industry. I know just with the litigation that happened last year, this is top of mind in terms of the conversations that we've been having as real estate agents. And definitely it's going to be, I think, more challenging for those who represent buyers more. And unfortunately or fortunately, when people are new in the business, majority of the business, like when I first started real estate, the majority of my business was actually buyers. And so the newer agents or less experienced agents might need their business pool tends to be more buyers. But if it's going to be more challenging to work with buyers and to kind of work through this whole buyer compensation thing, that may have an impact in terms of the newer agents, less experienced agents, or less productive agents, or people who are focused primarily on buyers. I think there could be an impact there. And so we need to look at that and how that's going to impact the membership of the whole industry and the numbers of people in the real estate industry, as well as, as participants in the MLS and whatnot. So I never want to end any of these sessions on a negative note. So I thought it would be good to share this quote. It comes from Stephen R. Covey, who is the author of The 7 Habits of Highly Effective People, as well as many other books. And I love a lot of what he says. That book I just went through recently. And here's a quote from him, which is, "Courage isn't absent of fear. It is the awareness that something else is important." And with all of the stuff that's going on, I know there's been a lot of uncertainty for those of us in the real estate industry. And how is it all going to work? And is it going to get more complicated? And yes, it probably will. And hopefully this settlement is a good thing and that it makes things more clear for everyone instead of having uncertainty. But it can definitely have that aspect of fear. And I think the important thing is that to really come back to what is the awareness? So it's not that we should just ignore what's out there, the reality of what's out there, and that there will be challenges. But more importantly, it really takes having an awareness that something else is important. And this is something that I come back to again and again in being in real estate. I never thought that I would get into sales in my career. But as I've been in real estate these past 16 years, I feel really motivated by the people that I meet and being able to help my first-time buyers get into their new home and then seeing their families grow and helping them then get into bigger homes. And then also working with clients whose children are now of home buying age. That's really cool. And then the flip side of that, of having people who are needing to sell because of a loss in the family and helping navigate through all of that. So there are so many important things that I feel so privileged to be able to be a part of in terms of helping people through just the transition and how real estate really impacts their lives. And so I think for me and for all of us in the real estate industry, I think it's important to just keep that awareness of what we're doing is important. And yes, there will be a little bit of messiness and we'll have to work through, but in the end, we'll work it out. And really, this is a person-to-person business more than anything else. And I know I was talking to someone and they said, "Oh, technology might take over." No, it's not, because it's just it requires so much handholding and personal guidance and whatnot. So I hope that everyone listening to this will go, "We're good." It could get messy. It could get a little bit, we'll have to work through some of the kinks of this. But ultimately, we'll do what we need to do, which is helping our clients and helping each of you to be able to achieve your real estate goals and to fulfill your real estate needs. So I hope that this was helpful for you. And if you are thinking about buying or selling in the near future, or if you know anyone who is, I hope that you'll keep us in mind. Please be sure to subscribe to this channel and to sign up for alerts so that when we do publish the videos, you'll be able to get notified of that. And if you're interested in any of our events or just would like to talk real estate or would like to see any other topics, please feel free to reach out to me anytime. So wishing you and your loved ones a wonderful weekend. great spring weather right now, and happy St. Patrick's Day, everyone. Bye-bye.